MicroStrategy is now sitting on over 330,000 Bitcoins, which is worth a bit more than 30 billion. But you'll notice that figure is well below MicroStrategy's around 80, $85 billion market cap. And this is because of that method in which it is actually amplifying the risk and reward. So if trading crypto isn't risky enough for you, here's MicroStrategy effectively. So I mentioned that it utilizes the fact that it's a public company to essentially, what it says anyways, is get free money. So it's raised billions through convertible notes with interest rates as low as zero, which then these loans can convert into MicroStrategy stock under certain conditions, basically, if the stock goes up enough. Obviously, this is much lower than the average borrowing costs, and the people who buy the debt are happy because if the stock is appreciating, then they get paid off too. This episode of the pod is proudly sponsored by Cadiz Inc. It trades on the NASDAQ under the ticker CDZI. Cadiz is a transformative water resource company that is making a significant impact with its $5 billion in water assets and $173 million in cash. The company is currently constructing a massive water pipeline, the largest in the southwest, which is designed to ensure reliable water access for the region. Cadiz is actively combating the water crisis with game-changing infrastructure projects and strategic partnerships. Under the leadership of visionary CEO Susan Kennedy, who previously served as Chief of Staff to Governor Arnold Schwarzenegger, Cadiz is set to provide innovative solutions and substantial value to both its shareholders and the communities it serves. Always doing your own research before making any investment decisions. The information provided here is for informational purposes only and should not be considered financial advice. Marie, how are we getting on?
I'm good. How are you?
I'm good. It's good to have you on the pod. I haven't chatted with you in a while now.
I know. Well, in an official capacity, I did see you in person like 5 days ago.
Yeah,
but
for thousands and thousands of adoring fans, this is the first time we've talked in about 4 or 5 weeks.
Yes, and we are kind of like a reality TV personalities where it only really does count if it happens on camera. Otherwise, it just, what's the point?
Exactly. And we've got very, very important stuff to discuss. My first topic is the Hawk2 Girls new meme coin is coming out next week.
No. Why?
It's gonna be with the ticker Hawk, which is
not great
image. Yeah, I guess we're getting to the stage where this happened. 2021 as well. The not even celebrities, the meme stars are coming out with the meme coins, and it's all getting very toppy, which is appropriate because I'm going to discuss MicroStrategy later as well. So yeah, that's fun. That's all fun. Maybe we'll see the return of SPACs as well.
Oh man, or what were the other ones with the art? I do think artists are still making them, but they really reached their peak of fame in 2021.
NFTs.
The NFTs. Yeah, we could see the NFTs come back. It's funny because I do think culturally we're at this moment where people are really like, get your bag. Like if you happen to have your 15 minutes of fame, exploit it, make as much money as you can. It won't last. But I wish people were better at exploiting the moment. I would like to see
I'm gonna challenge you on that. Hawk2 Girl has made as much money as she possibly could out of this whole thing.
Oh, definitely. But
interviewed on the street.
Yeah, but I like a meme coin. I don't know what other merch would be appropriate. Also, I'm assuming she already has merch. I'm sure she has a massive merch line. Yeah. But I just know there's just like the meme coin, the NFT thing. It's a bit lazy.
Yeah. Someone called this is what happens when Ellen DeGeneres has gone away.
I did see that.
The apex predator, and she makes sure that these things have a very short shelf life. So she would have killed Hawk2 Girl in about 4 minutes, and that would be the last we ever heard of her.
Yeah, you go on there, you get a lifetime supply of Vans. You'd never be heard from again. Yeah, that was exactly what happened. Because you remember when everybody made that kid from Target viral? He was just a cashier, and then he ended up on Ellen. Yeah, and then and that was it. He was on the Ellen episode. I think he had like 2 more weeks of viral fame, and that was it. The yodeler kid, though, from Walmart, he is doing well. He's on tour.
Oh, sorry. I'm getting mixed up. Am I?
Yeah, there was before the yodeler, like 2 years before the yodeler kid, there was just a random kid from Target. He was just a member of staff.
Okay.
And people were like, this kid Doesn't he look like he could be famous? That was the extent of it. There was nothing else. He wasn't even yodeling,
Okay.
just existing.
All
Yeah.
right. Well, moving on from that to some actual headlines. The big one here, I think, from this week is that Google is in trouble with the DOJ and might actually have to sell off Chrome. At least
Yeah.
that's what the proposition the Department of Justice brought forward. So what's the latest on that, Emery?
Yeah, so you are correct in the headline there. They have proposed that Google divest its Chrome browser to address the antitrust concerns relating to its dominance in online search. This recommendation follows a federal ruling that found that Google is guilty of maintaining a search monopoly through exclusive agreements and other practices. It's basically hoping to punish Google because it works so hard to be the default search engine. And this would include attempting to cancel agreements with Apple and Firefox to remain the default browser. I mean, it's been headlines for years, the $20 billion payment that Google is making to Apple. So anytime that you open Safari and type something into the top of the browser, it's using Google rather than
Yeah.
an alternative. So, I mean, that's pretty heavy. The DOJ is also proposing two remedies for Android, which would mean either you need to divest or you need to submit to pretty significant government oversight. By requiring either, the DOJ intends to foster competition and prevent the company from leveraging its browser in favor of other search engines. As we know, the search engine market is probably hotter right now than it has been in the past with ChatGPT moving. Microsoft is trying to just raise Bing up from the grave here. So it is kind of the time to do it if you were hoping to foster competition, because there's at least some legitimate competition out on the phrase. I mean, in terms of finance, though, Google search is pretty much the cornerstone of the company's ad business. Chrome is the most popular browser in the world, boasting a market share of almost 2/3 of people using the internet. And as The Guardian says, Google Chrome is an absolute vacuum of browsing data and a key gateway to Google search, and therefore ads shown via Google search. Its ad business precedes everything else the company does in terms of profit and importance. Ergo, Chrome is the second most vital part of Google. The loss of Android would have a similar effect, as it's important for data collection and ads, and is also a key way that Google reaches young people, which I actually think is kind of an understated perk here. Google OS is used on those cheap netbooks that have now are been basically every single school district in the United States. And if you are the default, browser OS app that children are using to learn how to use computers, it does mean that their comfort level remains there. And it means that they're more likely to return to your products in the future. It's actually interesting because when I was in school in the US, Apple had this like massive discount for educational purchases. And it meant that like I learned to use a computer on Apple devices. And it now means I'm like way more comfortable with the iOS system than I am with Windows. And so I do think that's a huge competitive advantage there. So again, by stripping Android away from Google, you could mean that maybe a new search engine or a new, Google Docs or something else would be able to come into the foray into the foray.
Yeah.
Is that what it is? Yeah. Okay. I almost said it into the foyer, like entering into a building. That's good. Anyway, in response, Google's chief legal officer, Kent Walker, called the Justice Department's proposal staggering, extreme, and unprecedented government overreach, which is not shocking because he works for Google. However, whether Google will be compelled to sell Chrome remains pretty unclear. Google has expressed that, such measures could harm consumers because, again, consumers are already pretty comfortable with Chrome and with Google. And Google is expected to submit its own proposal to the DOJ in December. So this is not the last of this. Like most antitrust cases, it's going to drag on for 7 years. And even if Google succeeds in appealing this forced divestment of Chrome, it seems pretty likely that the company will be compelled to end its $20 billion deal with Apple, which we discussed up at the top. They actually said in their letter, the letter that, again, Kent Walker submitted, they did say that they would be willing to discuss search distribution agreements, even going so far as to offer that they would terminate them. So that would be pretty interesting to see.
Yeah. That's the one aspect of this that I don't think is being talked about enough. Apple could be the biggest loser of this at all, because from what we've seen in the past with antitrust and the DOJ, I think breaking up Google sounds extreme, and
Yeah.
I like to say I don't know anything about antitrust on this podcast at least once a month, and I don't.
Mm-hmm.
So I will say that, but I just don't see something like that happening. Something that expansive, I guess. And you see
Yeah.
with like the power of Google and everything else. But what will seem pretty clear is that 20 billion payment is going away, which could be, I think it's
Yeah.
about 20% of Apple's net income.
Yeah, and it's a pretty, I mean, it's probably something that's nice to have. Apple doesn't really have to do much work
No,
for it.
it's
They just
free money
put Google
basically.
as a
Yeah.
default and yeah, move on. Yeah, so it will be them. It will be Firefox. Samsung as well, like receives money to keep Google as the default. So yeah, I mean, I do think that that could be the most significant thing to come out of it. It's also interesting to see Google so willing to allow it to happen. I would say that they have insider data that shows, like, even if during the onboarding process of setting up a new iPhone or Mac
Yeah. If
product,
you have a
if it
choice
asked
between
you,
browsers, everyone just automatically picks Google.
yeah,
Yeah.
I think, like, if I would, if it ever popped up and it was like, what search engine do you want to use? Google. What's the alternative? Bing.
Yeah.
I'm not gonna use Bing. I mean, maybe like Apple Intelligence is, brewing away there. It came out on the last model of the iPhone. They did strike a pretty significant deal with ChatGPT. I mean, maybe like that would be where we would move. Maybe Apple would want to favor its own interior products, but I wouldn't say it is yet on the level of Google search, especially in terms of like how familiar people are with it. But it is also interesting to point out, like, this is not the only antitrust case that Google is facing. It really has just had an onslaught of cases the last, what, 5, 6 years. The others that it has bubbling away at the minute is that it recently, back in September, lost an appeal against the $2.4 billion fine that it faced in the European Union for favoring its own shopping services over competitors in search results. Changes in this space are pretty much already underway within the EU. It's something that I've mentioned to people now. If, like, you're looking for a flight, if you go on Google and you're in the EU when you're searching, so you say, Dublin to Denver, it's not going to pull up the Google Flights results
Yeah.
first. It's going to offer you, Booking or one of its other competitive sites. The Epic Games lawsuit is still going on, which is basically Epic Games saying that the default of the Google Play Store is harmful for, app creators. That could still have huge impacts on Google because it makes money there. Yelp is also suing Google over local search results. It's alleging that it favors Google Maps over alternative services. That could still have a big impact on how search is appearing. And then there was a big EU update this week, which was that Google announced that it will be making further changes to search results within the European Union in order to comply with the EU Digital Markets Act, which is basically saying that if you're a search engine, you're not allowed to favor any of your internal products. In the past, Google had adjusted its search to increase the prominence of comparison sites for categories like flights, hotels, and shopping, as we were discussing a second ago. However, this was benefiting large aggregators such as Booking.com, but it's beginning to impact direct traffic for smaller suppliers. So maybe if you are an independent B&B and somebody is Googling hotels in this area, your own website is now below like every alternative hotel booking site. So now, for further adjustments, Google plans to let users choose between comparison sites and direct supplier links in search results, offering new formats for suppliers and comparison sites to be displayed. And it will basically highlight, this is an aggregator, this is an actual direct site. It's also going to test if it should remove where it pings where hotels are on Google Maps. Again, just to prevent people from favoring Google over a potential competitor for booking a hotel. Even though, like, people like these features. I mean, I've heard people complain about, oh, when I'm looking for a flight, I want Google Flights to pop up, because you a lot of the time end up using Google Flights anyway. But it's just providing that extra step so you do consider a competitor.
Yeah. 100%. I just all of this just goes to show how powerful a platform Google is, and it goes. Probably Facebook is a different argument, just because Facebook doesn't really have its own products. Say, do you
Yeah.
know what I mean? Like, is in advertisers advertise on Facebook, but they're competing with other advertisers, whereas advertisers
Yeah.
advertise on Google and are competing with Google. But
Yeah.
Yelp saying, "Oh well, we're advertising on Google, and then you show Google Maps," and it's like, oh yeah, that's what people came to Google for.
Yeah.
Um, Look, it when something scales to this level and builds such a dominant position, that's what happens. This is what antitrust is for, I guess, is monopolies essentially, and
Yeah.
those larger companies using their undue influence, I suppose, to favor themselves. If you were a comparison website of any kind, you got absolutely blasted by Google over the last 5-10 years. They're not as viable at all. Those price comparison websites in particular,
Hmm.
just the way Google has kind of leveraged its own platform. And the thing is, for the most part, it is actually benefiting the customer, which
Hmm.
makes this a bit more of a gray area, especially when it comes to regulation and stuff. Because I know Antitrust will always try to benefit the customer first. But yeah,
Yeah.
it is clear enough infractions that Google is kind of strong arming everyone else that is trying to play within its walls.
I mean, there is somewhat of a sense of like the horse is already bolted.
Yeah,
Like I'm sure Yelp probably noticed that the search traffic was dropping probably 10 years ago and did begin a process of saying, well, should we talk to Google directly? Should we file a lawsuit? And because these cases take so long, they can take decades. Even if they were to reverse the search algorithm tomorrow and place Yelp back up at the top of the results, when was the last time you were on Yelp?
yeah, that's true.
Like so much of this is just familiarity with the audience. And if you have spent this last 7 years losing all of your favorability with them, it's very hard, even with an antitrust lawsuit, to gain that back.
100%. Yeah, and even with that, like we talk about this stuff all the time. There's been some form of antitrust or investigation into pretty much everyone in big tech for the last
Yeah.
since we started this podcast, for sure.
Yeah.
Like I remember my first, I didn't obviously wasn't there when the very first came out, but my first intro to the podcast, our discussions were like people are getting really bored of us talking about court cases, essentially, whether it was Amazon,
Yeah.
Facebook, Google, Apple, Microsoft, whoever. And if you just look at the performance while all this has been happening from the stocks, really tends not to make much of a difference. Now, I'm not sure how extreme the actual sanctions will be from the DOJ to Google or from the EU as well, but even so, I'd be surprised if it really affected investors' wallets too much. But no, we have to discuss, because it's a law now, apparently. With every podcast, we have to discuss Trump at some point.
Yeah.
So tell us about what the new administration, how that might affect things.
Yeah, because it is interesting that you said, well, it seems that antitrust lawsuits have basically lost their teeth in the last 15 to 20 years. I mean, it comes up every single time we go and look at a historic antitrust case. I keep harping on about the Ticketmaster, Live Nation business that was allowed to happen. Basically, the DOJ said that could happen because they said, listen, we'll go in, we'll do the internal monitoring. It's all okay. It's all okay. And then the DOJ never did it. Like they never went in to prevent any of this
Yeah,
monopolistic behavior from
or
happening.
they don't have the capabilities to, which is a
Yeah.
very real thing too.
Yeah. And I think with tech companies, it's very, very difficult because it's not, you can walk into the office and have a look around. But I do think you need to be embedded internally to be able, you have to bring in all this kind of layers of expertise to literally be going in and looking at the algorithms, be looking at the code. I think that that's super difficult. And it's probably a testament to the fact that like the US government does tend to move quite slowly. And so they're probably building a team which will be ready for technology from 1995 tomorrow.
Yeah,
The team will be ready tomorrow, if you get me. But yes, so there is about to be an administrative change. The Biden administration over the last 4 years has worked very hard on some of these antitrust cases and very much would be called like a regulatory president, I would
very
say.
much so. And you see that in M&A as well. It's been very slow moving. Yeah.
Yeah. Yeah, and like it was interesting. A couple weeks ago, we got that case that now said that companies need to make it easier for you to cancel memberships. They can no longer put you in this infinite loop where they're going, "Are you sure you want to cancel your
Hmm.
membership? What if we give you 20% off?" Now it's just you have
Wasn't
to
it
be
the New
able
York
very
Times
clear.
made you ring them? Which
Yeah,
is
and
like
the
the
bad.
biggest no for anyone.
Yeah, you should just be like, "Never mind, I'll just take the subscription." You know what? I might use
Yeah,
it. The crossword is good.
25 quid a month to avoid a phone call, 100% worth it.
Yeah. Yeah, or the other big one is Planet Fitness, where it's only, a tenner to join the gym, but then like you have to go on some epic odyssey to find the person to cancel the
Yeah.
membership. So yeah, like all that, I think that's good. Like that is good for consumers. Coming into the Trump administration, it's a bit unclear because the sweeping generalization about Trump is you're saying, okay, he's anti-regulation, he's let businesses run, that kind of vibe. But Trump also previously said that Google is biased and
Mm,
called its search results rigged and threatened criminal charges. I would assume that those search results were unfavorable to him. And so he was like, we got to do something about this. However, while he has been critical of Google, he's also expressed concerns that if you break Google up, it could allow competition to come in from foreign countries, particularly China. He's very worried about China. So I don't really know what would happen. I think it's sometimes like Trump's administration tends to almost jump from topic to topic in terms of like what he is interested in. So I think the strategy, if I was Google, would just be trying to be ignored and just kind of flit around and hope that he doesn't think too much about us. And I would say that that's pretty clear because Google does seem to be shifting in tone the way that they talk about Trump. CEO Sundar Pichai emphasized Google's role as a neutral and trusted source in an internal memo to staff, possibly addressing allegations of bias against the Trump administration. So I'd say that's going to be the tone, is hopefully nobody looks at us too much. But it will be interesting to see where the DOJ goes from here. Google needs to submit a reply to the DOJ's order by December. And the new administration isn't coming in until January. So we will at least get to see Google's offer, and then the way these court cases go, we could be back here in 4 years with another new administration coming in, and maybe then it'll work.
Well,
So
that's
yeah.
what I was going to say in terms of historical references. We've never seen anything come about of like, I remember it was the Microsoft case back in 2001.
Yeah. Yep.
And they had, they had an antitrust. They had basically a search monopoly, and they were looking to be broken up. Is that correct?
Yeah, that is. So, back in the early 2000s, the big thing was that they had a complete dominance of the software on Windows, because they created Windows, obviously. And so for years, it meant that they didn't prevent you from downloading another browser, but Internet Explorer was a default browser, and we weren't great at computers back in the day. So it meant that like the vast majority of internet traffic was running through Internet Explorer. And so the DOJ found this to be anti-competitive behavior. It was said that it was stifling competition in the software market. And so the DOJ did order and came to an agreement with Microsoft in 2001 to the following terms. Microsoft was required to provide options for PC manufacturers and users to remove or hide middleware applications like Internet Explorer or Windows Media Player. Microsoft had to disclose its APIs to allow competitors to build software that could like seamlessly interact with Windows previously, because they hadn't put out API documentation. If you made software for Windows, it was like a miracle. And it was never going to function as well as a Microsoft product because they were keeping all of that documentation internally. Microsoft was prevented from retaliating against PC manufacturers that chose to promote or install any competitor software. And then an independent technical committee was established to ensure Microsoft's compliance with the settlement terms. Interestingly, that settlement was initially set to only last 5 years, but because of basically ongoing concerns, the monitoring and compliance obligations were extended until 2011. So I do think like that is the historical precedent. But I mean, you can't, like, some Microsoft software continues to be the only option. Like, think of how dominant Microsoft Office is.
Yeah, or like what happened with Teams and Slack. Like, they judged that was anti-competitive after the fact, but sure, Slack has already been sold off by that stage,
Yeah, and so Microsoft wasn't broken up, but it was weakened because it suddenly had to deal with all this stuff. And I actually think the lawsuit itself was more burdensome than what the ruling ended up being. And that's actually something that Bill Gates has said in 2019. He repeatedly stated that he felt that Microsoft ended up being distracted by the government antitrust trials throughout the early 2000s. And he felt that it meant that Microsoft was unable to focus on the development of a mobile ecosystem, like one, for example, to creating an iPhone before the iPhone existed, creating something like iOS. I mean, obviously, 2019, he rose-colored glasses looking back at Microsoft. I'm sure Microsoft was cooking up the iPhone in 2001. But I'm sure it does slow down your teams because all of a sudden you have to deal with all these government officials who are coming in and scrutinizing everything you did. Tech companies love that saying of, move fast and break things and worry about the rules later. Yeah. So like that's our comparison point, and that was over almost 25 years ago. So it will definitely be interesting to see how things develop with Google. I mean, we can check in with them in December and see what they have offered up. I wonder if it'll be quite weak because they're hoping that the Trump administration will just
I'd say
push things under the rug.
Offer a couple of billion, and that'll probably be it. Do you know what I mean? It's a sad state of affairs, but I'd say that's how it's going to end up. Maybe I'm wrong.
I think they will I think they'll terminate the agreements with Apple and Samsung and Firefox and play that off as being good enough.
Yeah.
Because I think they kind of want to do it anyway. The way that they responded to the suit was suspicious in the way they were like, well,
Yeah.
we would be willing
And I, like
to
that,
terminate
and
this.
that could be a great kind of olive branch while also saving them billions. Because you're right. I think if someone is setting up a new iPhone and they say the default browser and their choices are Google, Bing, or DuckDuckGo or whatever, I
Yeah.
think 95% of people are just going to pick Google.
Yeah. So, yeah, it's just the same as it feels like every time we report on this antitrust stuff, it's like, yep, the argument is valid. There probably is monopolistic behavior. We probably would benefit from additional competition in this space, but
Yeah.
yeah. So,
Okay. Yeah. No, it's interesting. And I think I was looking at the valuations of big tech there recently, and Google, I think Google's sitting at the lowest. It's sitting below a market multiple, which is kind of crazy considering how quality of business Google is. I'm wondering, is this stuff weighing it down? But again, I don't know if investors give it enough credence. So
I
yeah,
mean, it could be. Maybe, Trump could surprise us. He could come in and he could say, get rid of Android and get rid of Chrome. And then what is Google?
yeah, it's a bunch of
You know,
ad exchanges on
yeah.
YouTube.
Um,
So
so there could be something crazy and drastic that happens. I kind of doubt
yeah,
it.
I
I don't
find it
know.
hard to believe as well. Hi everyone, just going to interrupt for a quick second to tell you all about what's going on at Horizon. So for those of us lucky to attend, we had our Horizon live event last week in the Irish Stock Exchange, and one really interesting thing to come from it was that all three panelists decided that this one stock was on their desert island list. It's high risk, it's high reward, but it is one of those businesses that could truly be world changing. So in next week's Horizon Buy Alert, we're going to announce that stock. It's one that's already within the Horizon folio. So if you are part of Horizon or want to be part of Horizon, just email in at pod@mywallstreet.com. That's pod at mywallst.com to hear more about it. Okay, back to the show. We're going from Google to MicroStrategy. What do you know about
Yeah.
MicroStrategy?
I know that it was, speaking of 2001,
Yes,
didn't it was one of it was one of the tech bubble stocks, and it shot up. I've seen the chart. It went way
yeah.
up and
Bill
then just plummeted.
Bill Mann
Yeah.
described that as a middle finger chart, which I thought was funny.
That's
Although
great.
even I think MicroStrategy is even sharper, so it might even fall into that. But yeah,
Mm.
so interestingly, actually, you're talking about the 2001. It was one of the it was 2000. I think it was March 2000. I have it in my notes here. Um, yeah, March 2000 was its all-time high up until about 2 weeks ago. So if we're talking about,
Ooh.
like, a history of bubbles, this stock is right up there.
Mm.
Um,
This is why you should buy and hold. Just anything could happen.
23 years later, 24 years later, and you finally make your money
Yeah.
back.
Oh.
Okay, but for those who don't know MicroStrategy, it's this legacy software maker. Obviously, was very involved in the dot-com bubble. It's run by this fella called Michael Saylor. And since 2020, he's just completely pivoted the business to become essentially what's a Bitcoin repository. It still takes
Cool.
in about 100 million a quarter in software revenue, but
Mhm.
it's not what the business is at all anymore. It's kind of using its status as a public company to be able to buy bitcoins in a different way, which we'll get into. But what's so fascinating is that it's almost like an accelerated and riskier way of betting on Bitcoin, because realistically at this stage, if you're a Bitcoin advocate, you can just go and buy Bitcoin. The access to it is so commonplace now. Why would anyone need a proxy like MicroStrategy?
Mhm.
Um, so MicroStrategy is now sitting on over 330,000 Bitcoins, which is worth a bit more than 30 billion as of recording anyways. I know it'll change pretty fast, but you'll notice that figure is well below MicroStrategy's around 80, $85 billion market cap. And this is because of that method in which it is actually amplifying the risk and reward of Bitcoin. So if Bitcoin's price is going up, MicroStrategy kind of it has a high beta on that again. So if
Mhm.
trading crypto isn't risky enough for you, here's
Right.
MicroStrategy effectively. So I mentioned that it utilizes the fact that it's a public company to essentially, what it says anyways, is get free money. So it's raised billions through convertible notes with interest rates as low as zero, which then these loans can convert into MicroStrategy stock under certain conditions, basically if the stock goes up enough. Obviously, this is much lower than the average borrowing costs, and the people who buy the debt are happy because if the stock is appreciating, then they get paid off too.
Mm.
And then it also actually issues shares as well. So particularly during when the stock is going up. So again, free money in a sense. Obviously, both instances will dilute existing shareholders considerably. But again, if the stock is going up, it's kind of a win-win-win situation. Now, if that sounds kind of as kooky as it's, it is kooky, basically.
Yeah.
But it all works in this very fragile bubble when Bitcoin prices are going up. And that's what's happening right now. So they've essentially created this positive feedback loop in which the company issues equity or debt to buy Bitcoin. Bitcoin goes up, boosts MicroStrategy's stock price, and then the debt or even the equity it issued, anyone who's buying on the other side is very happy because the stock price goes up. The higher stock price then allows for more equity issuance, which funds more Bitcoin purchases. And if you're buying Bitcoin at this level as well, you're going to send the stock further up. The price of Bitcoin up as well. Do you know what I mean? So it's kind of just this very frothy, bubbly phenomenon that's popped up. And in fairness to your man, Michael Saylor, he's been a huge Bitcoin advocate since, well, before 2020, but like as in 2020 when he really concentrated the business on this one fact. Like, it's funny that, you know, there's just another business, a $400 billion business, a $400 million in revenue business, just kind of operating in the background while it's become one of the biggest companies on the stock market. Like, as in, last time I checked, it was $85 billion market cap. Obviously, it's hugely volatile, so that might be obsolete by the time the podcasts get published. But that's bigger than Target, Atlassian, Moody's, PayPal, Chipotle, FedEx. So it's been one of the best performing stocks in the market this year. It's about a five bagger year to date, and was an 8-bagger in the past 12 months. But since the decision to start buying Bitcoin back in August of 2020, the stock is roughly up 25x, which is just complete madness. Do you know what I mean? And he's not even stopping there. Like, as in, he's got a plan of 21, which he plans to raise an additional $42 billion, $21 billion in debt and $21 billion in equity issuances over the next 3 years, and fully just wants that all to go to Bitcoin. So it's madness.
Cool.
And like we were talking, making fun of the Hawk2a girls meme coin, but you're really seeing this kind of toppy activity happening more and more. And like, look, if you have reasons to buy Bitcoin, by all means, fair play to you, and enjoy this kind of purple patch right now. But like, in the since its first major rally in 2011, every single Bitcoin cycle, we'll say, has experienced an 80% fall from bull run to bear market trough. Damn. And like, what's advantageous if you're a very long-term holder is that the gradient of these falls and rises after keeps getting higher. So, you know, the 80% fall went from 50 to 10,000 back in 2020 or whenever it was. But now it's going, say, from, I don't know when it's going to stop running at this stage, but say it goes from 100 grand to 20 grand in the next kind of fall. And then this cycle keeps happening and keeps happening. So what happens to MicroStrategy if something like that happens? Obviously, the Bitcoin on its balance sheet would lose its value, so its net asset value would go way down. But you'd also have to refinance the debt. You might need to issue loads of new stock, probably at depressed prices. All of this would lead to not only amplifying Bitcoin's dip, but also like every shareholder would really get washed out because you're also getting diluted again, but on the downside. Like, the dilution is easy to stomach on the way up. It does not work on the way down. So it's real cowboy stuff from MicroStrategy. That is working wonderfully right now in the current rally. It can only work in a rally. It can't work in any other time. Even if Bitcoin is just flat for a while, none of the finances really make sense either. So I'm expecting to see the wheels come off at some point once the current hype cycle calms down. But who knows? We aren't really, I don't know. We haven't seen a Bitcoin bear market with all this institutional money involved. Like, you know, BlackRock has an ETF and all the rest. So it mightn't be as extreme. Maybe that 80% dip might be kind of cushioned slightly. But yeah, it's wild times, and very much back into the casino nature of stock markets. Which,
Yeah.
look, it is what it is. Like it just seems that for whatever reason, the inclination to gamble is just stronger and stronger. Like, as in, we're talking about MicroStrategy and how kind of nuts it is, and if crypto trading alone wasn't kind of risky enough for you, here's a way of amplifying it. Like, not only have they done that, but like you can get even riskier. So now there's a bunch of leveraged ETFs that have popped up, which look to like create an amplified performance of MicroStrategy. So if MicroStrategy, if MicroStrategy is creating an amplified performance of, say, Bitcoin price because of the way it trades it, then this leveraged ETF, there's one that that amplifies. So it's a 3x leveraged ETF on MicroStrategy stock. So for every 1% MicroStrategy moves up or down, this ETF will move 3% up or down. I was looking at it.
Great.
I was looking at it. It's up like 700% this year. Like, but it's pure batshit stuff. Like, do you know what I mean?
Yeah.
And obviously, then these leverage ETFs, I think they make up something like 9 or 10% of total MicroStrategy shares. So now they're increasing demand for shares as well, which also feeds into this feedback loop. And look, I don't know how to describe it. I thought it was interesting, and I think it's one of these anomalies that just pops up, but it is pure madness at the same time. Like, I don't know what else to call it.
I have two questions. Well, kind of statements.
I definitely don't have any answers that make sense.
But surely, like, this goes against the whole idea of decentralized finance, right? Like, if one player can absorb up so much Bitcoin that they can effectively move the price, and then they can, that
some
then
form
creates
of
this
centralization.
Yeah, like, surely that's an argument for, oh, well, Bitcoin will be centralized. I mean, it's the same argument similarly when it came to ideally, like, decentralization in Bitcoin occurs when mining is decentralized. But as we know, the largest owners of miners end up being Coinbase, because they need to be able to provide the coin to the people who want to buy it on their platform. And then you're like, well, that's not decentralized if Coinbase is doing all this.
Yeah.
And my second question is, what does MicroStrategy do other than own Bitcoin? If it's generating 400 million, what is that from?
Business intelligence software.
Okay.
that's
cool.
That's all I bothered looking up about MicroStrategy, apart from the Bitcoin thing.
Okay.
Yeah, business intelligence software.
Business
apparently.
intelligence software. That's like
it's falling 10% a year, but still taking in 113 million in Q3. Like, that's
not
a
too
functioning
shabby.
company. Do you know what I mean?
Yeah.
But like,
that sounds like a scam, though. What do you do for work? Oh, I work in business security software.
But like, on the
Okay.
on the ideological kind of decentralized finance points, I don't really think a lot of this has to do with that. I think this is an avenue for trading, an avenue for gambling. And look, it is what it is. Like, I think, I would hope anyone that finds themselves near a 3x leveraged ETF on a single stock, and that single stock being MicroStrategy, knows what they're getting themselves in for. Do you know? I maybe I'm wrong, but like, maybe I'm wrong. Maybe there are people that are just looking at the most successful stock of the year, which I think will be MicroStrategy, unless Bitcoin takes a dip in the last month, and be like, oh yeah, let's buy that. But I would hope that most people have an idea of what they're getting themselves in for, and realize that this is not for long-term wealth creation. This is for gambling, and this is for trading and enjoying the nutsness of it as well, because that's what it is. Like, and we haven't even factored in the effect the Hawk meme coin will have on all this as well.
I know. Gosh.
So
that could become our centralized currency. Just you wait. It's all fun and games until Bank of Hawktua is the default currency in the
Bank
world.
of Hack. Okay, we'll get back to a more normal stock, although not that successful one. This came in from the Horizon community, from Doug. So he wants to know about Vimeo. IPO back in 2020, obviously back when everyone was IPOing. You wrote a few articles about it back then. So what's the update for now?
Yeah, so just say off the top, it never made a My Wall Street like shortlist or any of the paid products or anything like that. I wrote about it when it IPO'd in 2020 based off the S1. I think it wrote about it just before it came onto the market, and then I checked in with it 6 months later because we tend to have a blanket policy. If we don't, we wouldn't pick a stock right on the back of an IPO. You want to give it 6 months just in case. I do think companies tend to IPO on their best financial day ever, and you need to make sure that it's true. 6 months down the line. Um, I pulled a quote from my initial write up for the reason that I thought the stock was interesting. And I said, Vimeo identified its main customer base as small to medium sized businesses who use video for marketing to consumers. This fits an investing theme we've seen emerge over the past few years, digital tools that automate and simplify tasks for small businesses. That excited me because my Wall Street has had recent success with picks that fit this category. For example, Bill.com or Slack. Okay, because and the reason that the small to medium sized business strategy is interesting is because if you can sign a license deal with a company that has 3 employees and maybe they're only giving you $5 a month, if that company does well and grows and over time they get 200 employees, your license for that business is going to grow substantially.
Yeah.
And then that's nice, consistent revenue. It's a really like interesting place to be investing. And I
It
think that there
is.
are definitely.
I completely agree, and I do. Even the idea of like empowering smaller businesses is very important.
It's nice.
But it's no
Yeah.
coincidence that once a business reaches a certain scale, that they all end up going. And now we were going up
Yeah.
market to larger enterprises. It happens with Shopify, Paycom, like all those businesses that start off
Yeah.
as the kind of plucky up and comer. And maybe
Yeah.
that's just what goes with scale. This strategy works up
Yeah.
until a certain point.
Yeah. And then, the company will have some like business concern or they need 1,000 seats on a license or something. You do churn out eventually. However, so that was the thing with Vimeo. And we thought, hey, that's really interesting because at the time, 2020, 2021, that was the rise of TikTok. That was when Instagram Reels showed up. And there was a real sense of, hey, you have to be making video. Even if you're a one-man band and all you're doing is selling something, your crafts on Etsy, you might need to be making some Instagram Reels. And if you're like, you don't know what you're doing, you could go to Vimeo, you could get a nice video template, you shoot a few, images of your handmade belts or whatever you're doing, and it would help generate you your clips and you could put that up on Instagram. Easy peasy. I thought that was interesting. I thought that was compelling. And that was the number one thing that it had identified in its S1. So I didn't make it up. Vimeo said, hey, we're small to medium sized businesses. Cool. And then when I checked in with them after the 6 months, pretty much all of the growth and excitement around the small to medium sized businesses was gone. And they basically said, hey, we need to pivot. The only growth that we're able to get that's, substantial and that can sustain us is in enterprises. And that wasn't super interesting to me because growth in an enterprise segment can be kind of difficult. Consistency there can be kind of difficult. And so I went and checked in with their latest quarter, and the same thing is still true. So in their latest quarter, subscribers and revenue in the SMB segment, which is called the self-serve segment, was down compared to 2023 and has been falling steadily since 2021. There is growth in the enterprise segment, but it's so small that it doesn't really make up for the fall in the small to medium-sized business segment. And I get a sense that a lot of these big enterprise businesses only have this software licensing because they're using it for video hosting rather than the video editing tools. So that's pretty lame because, again, that's not really what we were interested in them for. And then revenue is pretty much flat year over year. They did skirt into profitability last year, but it seems to have been done because they cut over 10% of their staff. The original CEO that we liked was gone. It's just not the business that, I wrote about initially. So it would definitely be a pass for me
Yeah.
now, which is sad because I thought it was an interesting concept.
This chart is so I don't know how to describe it. It seems so universal now. So down 88% from all-time highs, which was, I think, IPO day was all-time highs, which is not a good sign. But even then, like as in that year to date, up 75%, they're all having a slight resurgence, which I'm not sure if is that a canary in the coal mine.
I mean, I do think that there are like smaller cap businesses that did IPO in 2020 and they were all hammered.
Yeah,
it didn't matter if
there's
you were performing.
with
They all dropped.
baby out with the bathwater for sure.
Yeah. And so there are now some interesting businesses that we are looking back at, and their stocks are beginning to move, and we're happy about that. Ironically, the company I mentioned at the top, Bill.com, is beginning to move back because we're, again, beginning to see revenue stability, and people are just, a bit more assured in stocks like that. It's the same with like Lovesac, like appeared on the market around the same time, tanked, and is now steadily coming back because they are showing consistency. And so I think if you are a business in that space, that is nice. But again, it's like all boats rise in a high tide. People are just now saying, oh, what other companies IPO'd in 2020 and are down substantially? So yeah, not for me.
Not for you. Okay. Well, I think that's where we're going to end the show. Anne-Marie, it's a pleasure having you on. We should do this more often.
Thank you for having me. We should. We'll let Emmet know he's not allowed to come back.
Thank you, everyone, for listening in. And that's it. We'll talk to you next week.